Every morning, you do a morning news kind of roundup looking at the state of the industry or other developments. And there's be some topics that have been brought up there I'll get to later on. But as someone who's looking kind of at the state of the industry and kind of having a 1,000-foot view of how the various parts and pieces work together, GM today announced its first quarter earnings, and they seem to be very happy with it, that they're more or less keeping track with the fourth quarter of 2023. They say they have a $43 billion in revenue and $3.9 billion more or less in terms of overall net profit. What is your kind of initial reaction to these numbers? I mean, we've had a variety of different factors over the last couple months, but as of now, GM seems to be holding strong.
This is the report that GM wanted to have in the first quarter, and they previewed last year that this is what they were going to do. They said, we are going to cut costs, we're going to increase margin, and we believe that in a challenging market with a challenging EV transition and with other problems that, GM has had over the last year and other automakers have had, that, they're going to probably, at least for the next few quarters, prioritize getting that share price up, and prioritize showing the markets that they are a responsible and really great partner, a really great investment. And so they've done that. They've shown that their margins increase. They've shown that they've been able to, maintain revenue growth even in a sort of challenging, kind of uncertain market. So they've done all those things. In the short term, it is a good place to be. I mean, most importantly, if you're looking at the markets and, they've done so far today, they've done well, is they've been able to increase their profit guidance for the year. And it's not a ton, it's $300 million. But, for the last few years, especially after the pandemic, we've seen that number tend to go down over time and over the year. And to see that number go up is a really great sign. So I think, the team at GM really sort of hit their marks and hit their numbers to be able to show the market that, hey, we are a good investment, which is what they really want to do.
And in their interviews with ABC 12 this morning, they really pointed to the strength of they said across the board, they talked about how all their brands have been performing well. And then they really wanted to highlight kind of talking about their full-size truck portfolio. Obviously, with Flint, you've got your heavy-duty Silverado and the Sierra, and those ties in general to Michigan. So they really like their full-size truck, but then they also did carve out space to talk about the track, Chevy Trax and the Buick Envista and the Trailblazer. There's obviously a wide range in those vehicles in terms of both the margins on the vehicles and the different customers that would be shopping and targeting those.
Absolutely. And it speaks to where GM has a big advantage. It has a lot of brands. It has more brands than Ford. It certainly has more brands than Tesla, and which is just one brand. And they're able to sort of balance their portfolio and use their real, strength, which is engineering. GM's probably the best, maybe the best engineering company in the world. And so they're able to use that strength to find pockets and places in the market where they can compete really well. So I've kind of been lucky in that in the last few months, I've driven both extremes. I've driven the Buick Envista, which is one of the cheapest cars they make, which shares a platform with the Chevy Trax. And I've driven an HD GMC Sierra, Pride of Flint, big AEV, big truck. And these are, again, like two extremely different vehicles, but they're both very well made. They're both very well targeted for the customer that they want to have. And I think what's interesting there is that, over the last year and a half, 2 years, we've heard a lot from GM about electric cars, electrification, and the Ultium platform, and everything that they're doing there. And the messaging now is, oh, hey, as they're trying to go towards the market, those aren't profitable yet. They say they expect still second half of the year to become, sort of net profitable with EVs. But they're saying now, they're like, oh, but by the way, never forget, we still make all of these really, really profitable trucks. And even if, prices come down or they moderate a bit on big trucks, 2.5% off something like a Sierra 2500 HD, which is just a huge, huge profit center, just extremely profitable vehicle, you're still making a lot of money. And then at the other end, I think, one of the best cars made, they're not made, but one of the best cars that you can buy in America from anyone, I think, is the Chevy Trax. It's extremely affordable. It offers a lot of what you want, and it doesn't have a lot of stuff you don't need, but it doesn't feel like a poverty spec car. It doesn't feel like maybe the Geo Metros of our youth. It's a great car. and it looks great, and I think it's nice. And because the pricing is so competitive, it's, most people are transacting in the $20,000 range. They don't have to come down on price because there's not really that much that's that competitive, especially if you want an American car. It's a very small group of vehicles that you can get. And it's so much better than if you think of like a Rogue Sport or you think of like a Mitsubishi Mirage. It's a superior product. And it gives this weird moment in time where, we kind of expect pricing to come down for all cars this year. This is kind of the year of affordability because interest rates are high. So there has to be some give, which means that that give needs to come from pricing. But Chevy, the CFO Paul Jacobson said, actually pricing's been kind of flat in the first quarter. And I think a big reason why is, and as he kind of pointed out, and he pointed to the products like the Buick Envista and the Chevy Trax and Chevy Trailblazer, is that these are cheap cars. You can't make them that much cheaper. You can't sell them that much cheaper because the margins are already pretty slim, which means that if you sell a bunch of them, they don't have the margin, sure, of a giant GMC Sierra or Chevy Silverado. But if you sell enough of those and you're able to keep pretty close to your intended original price and close to the MSRP for all of those, then over time, actually, you average out pretty well. You end up doing okay. And actually, I think that rather than seeing prices go down significantly for those cheaper vehicles, I think the demand is so high that not only can those prices stay pretty solid, I think over time, as other automakers struggle to get cheaper cars into the market, I think we can actually see a little bit of price increasing for Trax and Envista and Trailblazer, where, it maybe not be a lot, but every dollar closer to MSRP or above MSRP in this market for an affordable car is a huge win.
And I want to go do a little bit of an aside on this with the tracks. It's the new one, the new model that they've come out with, the update to it. It seems kind of almost radical from what the vehicle was before, which seemed a little bit like a penalty shoe or shoebox that you just kind of live with, similar to what the Ford EcoSport was, which I believe has now been just discontinued as of last year. I'm a little surprised that if we're offering a company's offering an affordable car, they're not just pricing in of, well, you can't afford anything else. This is what you're going to live with. I'm a little surprised that they invested so much to make it an attractive option while keeping it so affordable, as opposed to maybe putting those resources for a redesign or other efforts allocating it somewhere else where there might be a bit more profit.
So this is where I think GM is really smart and has sort of learned something from the Korean automakers, from Hyundai and Kia, which is that design doesn't cost a lot more. Making something look good isn't that expensive. And being a little bit thoughtful in those areas and making something feel a little bit and look a little bit nicer isn't a huge expense. And so if you look at where the Trax really benefits and the Invista really benefits the consumer, is that they look good. Even the lowest spec trims look nice. Like there is no spec trim of those vehicles that's low enough that you're like, oh, well, that's the cheap one. They all look good. I mean, does the RS look better than this? Some of it's just a matter of taste. And that doesn't cost a lot. Per unit, that doesn't cost a lot, as opposed to adding a bigger motor. None of these cars have bigger motors. They all have basically the same motor. They all have basically the same transmission. They're all front wheel drive. There aren't a lot of options when it comes to powertrain. And really, there are no options when it comes to powertrain. They're the slight differentiation, Buick and Vista, and then higher trims of the tracks. You can get a slightly better suspension setup, like a Watts link in the rear. But otherwise, it's basically the same car. And they're correct in that consumers at this price point aren't really going, I'd really like a 4-cylinder turbocharged motor as opposed to a 3-cylinder. Some of them may be all-wheel drive. That is a little bit of an issue. But then they have the Encore GX and the Trailblazer for people who really want all-wheel drive. But for people who don't need all-wheel drive, which is frankly almost everyone, they're, maybe outside of Michigan maybe a little bit more, but elsewhere in the country, if you're in Texas, what do you need all-wheel drive for? Like, especially in this car, do not take this car off-road, even if it's like a quote-unquote SUV. Like, it's a crossover. And that helps them get so much market share because a Mitsubishi Mirage is a blob. Nissan Rogue Sport, the outgoing Rogue Sport, it's fine. It looks fine, but it doesn't look special. It doesn't feel very good. And also, there's just like a little bit extra refinement. And I think that's actually probably the biggest difference between the old Trax and the new Trax. Old Trax looked kind of blobby. It didn't look great. It didn't feel great inside. It did feel like a cheap car. It was okay. It felt like a first car. Like if you're 21, it's a completely okay first car. but it didn't feel refined. It felt very cheaply built. The new one feels great. Like it feels like for the price, I should say, it feels great. It doesn't feel like a new BMW, but it feels like a car. Like it's nice enough that you really don't notice the CVT. The engine's a little buzzy, you don't notice it. And I would say, actually, the real competitors in this spot are the Honda HR-V and the Toyota Corolla Cross. And I would probably take a Trax over a base HR-V or the non-hybrid Corolla Cross because they all have kind of buzzy transmissions and engines. And like the Trax is just, maybe as or a little bit more refined. And that's such a huge difference. And it's great. And again, that's engineering, which GM is really great at, and a little bit of marketing and a little bit of design. And it all works together. And I will think we'll see over time GM really increasing its market share on the backs of those vehicles.
Now, with that, part of it too is looking at these numbers. I would be a little surprised based on, I mean, interest rates are still high. I would have assumed that I could maybe chalk up last year's numbers to there's still a pent-up demand in terms of new car buying for 2023 from leftover from the pandemic. But we're coming into 2024, supply is increased, interest rates still kind of suck, but yet the automaker is still turning a decent profit. What are you seeing a difference in change of how consumers are behaving, or is it something specific with their portfolio that is helping them compared to some others?
GM has a few strengths. So it has a financing arm, and what GM can do to move product is eat a little bit of financing costs to offer lower APR financing on certain models they need to move. So that's really helpful for the automaker. The second thing I think is good product. Like they still have great trucks, and if you need a truck, you need a truck. And trucks can, are well built these days. They can last longer, certainly. But if you're using it a lot, then you're going to want a new one pretty frequently. And the tax laws in this country are pretty helpful in that regard. And then they do have a good product range. I mean, if you look at across the board, most GM's brands are doing okay. But Buick is really growing. And Buick is, in some senses, at a volume level, the fastest growing brand there is in the United States. Yeah, smaller ones, Fisker, you go from selling no cars to selling a few cars, you go up percentage wise a lot. But it's actually Buick that has been consistently the fastest growing brand in the United States. And that is they have a car in each important category, which is small crossover, not quite so small crossover, kind of regular crossover, kind of slightly bigger crossover. And they have attractive, affordable, relatively economical versions of each one of those cars, and they look good and they offer a really good value. And that's great. And there's obviously a Chevy version of all of those as well. But I think Buick really points to where GM can leverage its might and also its global operations. Because if you look at Buick, two of those cars are built in South Korea, one of those cars is built in China, and one of those cars is built in Canada. And so they can use their global reach to see where can we make these cars affordably, where can we save a little here and save a little that, and kind of balance our portfolio and our manufacturing to deliver a car to a customer that is attractive, well engineered, and reasonably affordable.
One of the things they were pointing to as well, I think for Buick, I've got questions and thoughts, but that might be a conversation for another time, especially as some dealerships are dropping their Buick affiliation, yet Buick numbers look great. So that I think is more of maybe a micro level. But in terms of part of the portfolio that they're talking to is that they're talking like they're happy with their EV sales numbers as well. They're talking about the strength of Altium and how they're starting to get better at rolling things out from the Hummer. And then they talk about how the Lyriq was one of the best-selling luxury vehicles. And they say their battery production is up 300%, but I've not necessarily had a chance to see these vehicles really out on the roads yet. Is it kind of just we're not seeing they finally got the ball rolling and it's just not come down the hill yet?
I will believe that GM's EV strategy and portfolio is working, if we get to the end of the year and we see multiple quarters of significant growth, because right now GM is not the second biggest EV company in the United States anymore. It's Ford. And Ford doesn't have the product breadth that GM has coming. And so Ford has had an issue with having kind of these first, second generation EV platforms that are nice, they're good. Like the F-1 Flip Fleet Lightning's a good car, the Mach-E's a good car, but they're not exactly what the market necessarily wants all the time. And they're not, the Mach-E's in a very crowded space where you have to compete in a price war with Tesla and the Model Y, and it's a somewhat harder argument to make, although their pricing has come down. Whereas GM's problem is just building the dang things. Like they just have not been able to consistently build cars. And actually, one of the things that I looked at all of last year was BrightDrop, because BrightDrop isn't a vehicle that needs to be marketed as much. They have a built-in customer to some extent with delivery companies there, and so BrightDrop production was really low. And every time BrightDrop production would slow down because it's uses a lot of the same Ultium technology, I was like, oh man, that's a bad sign. I do not feel good about where GM is going with electric production. Just now we're starting to see that fix. Just now we're starting to see that turn around. They're starting to get over those issues. Everything's requalified for tax credits now. And so, yeah, okay, their first quarter numbers are up, but I think Hummer sales were up 1,000% or 1,800%, but that's because they only sold two of them, in the prior year. And so it is I'm sure that production is up. I'm sure they're getting closer, but I want to see long term that they can keep those numbers growing, because also we see huge incentives on things like the Cadillac Lyriq, and we've seen huge incentives on the Blazer. And so how long can they keep doing that and also be profitable? And last year they're having to compete with the fact that last year they were still selling the Bolt, which the Bolt is a great product for this market. It is what they need to be making. They need an affordable EV. And so the real sign is, can they keep growth in Lyriq? Can they keep growth in Blazer? Hummer I don't really care about, but really it's those two vehicles. And then when we get to the end of the year, can they actually launch an Equinox EV that is close to their price projections? They've said we're going to sell the 3RS, the 2LT, the higher trim versions, more expensive versions of this car first, and they'll qualify for the $7,500 tax credit. So, a $43,000 car is now closer to a $35,000 car, but that's still a really competitive spot to be in. Can they actually get into 2025? Can they get that $35,000 Equinox EV 1LT that they've talked about out? They can do that and they can consistently build them and they can keep those margins good and they can keep production rolling. That's a good sign. I think a $35,000 Equinox EV is a great vehicle if they can do it. And I think it'll sell pretty well, because that, honestly, when you get the tax credit in, that brings it into a little bit closer to Bolt's territory for a vehicle that, I've been driven it, but I've seen it and, I've looked at it and poked around at the auto show. Looks like a great product. So, kind of trust but verify. Like, seems like legit, but like I want to see 4 quarters of growth, not relative to selling 2 1/4 as it was with GMC.
I guess my question would be the EV portfolio that they're working on. I mean, Tesla is now what has a dip. I mean, their profits overall they're still profitable, but they're starting to decline for the first time in a couple years. It's not been just a straight up vertical line, or however they've been measuring it. Are we starting to see customers where is the Trax kind of more of a viable alternative to the Bolt, or if there's an EV customer, they're looking for EVs, or I guess I think right now we have a lot of early adopters. They've gotten Teslas. Is it now kind of trying to sell EVs on the general populace, and is it? I don't know if there's just anyone's really figured out the strategy besides just make it affordable and people will buy it.
Yeah, I mean, I think there's a few things in that question. First of all, there's no shock that GM is bragging about having trucks and being able to make money that way, because that is something Tesla can't do. GM's margin went up this quarter. So later today, Tesla will report its earnings, and I think we're going to see its margins come down. And so GM is smart to brag about its margins going up. However, we should also understand that margins for Tesla are still probably 2 to 3 times bigger than GM's margins, so it is sort of a different thing. But it's, the Bolt question is an interesting one. Are people cross-shopping Trax and Bolt? At some level, if all you have to spend on a new car or want to spend on a new car is $25,000, you have almost nothing desirable in a new EV that you can buy. Used EV, you have a lot more options, but a new EV, not so much. So if you're like, I want a new vehicle, and I want to spend under $30,000, all of a sudden the Trax does become sort of interesting to you. And there are hybrid options. And GM, actually, this is one place where I think GM is in potential trouble in that they don't have good hybrid options. They were leaders with the Chevy Volt in having extended range hybrids, much like they were leaders in electric cars and having the GM EV1. And as is GM's want, they love to develop things and come up with great futuristic technology because they, again, are an amazing engineering firm, and then kind of abandon it for a while. So now GM's having to go, oh, well, we need hybrids again. And the good news is that in China and other markets in the world, they do have hybrids, so they can, theoretically graft those back on. But yeah, I mean, if you've got 25, 26 grand, you want a new car, Buick Envista, Chevy Trax, those are very far from EVs. They're efficient for what they are, but it's not the same thing as a Bolt. So it's tough. A used Bolt is a great option, honestly. The biggest competitor to a new Volt in the absence of a new Volt is probably a used Bolt.
I think then the next part just becomes the path forward overall, that they've raised their kind of projections for the year. They're looking very rosy for the outlook for the rest of the year. And then beyond, is GM just kind of going to stay the course with its plan for really capitalizing on a multi-brand kind of ICE portfolio, and will sort of bring along EVs whenever it brings it along? Is its strategy as of now viable long term? Will it continue to see profits? I'm just the overall trajectory of the company. What are you seeing?
Here's where I'm going to be a little bit controversial, and I've been very hard on GM and Mary Barra in particular. So in the run up to 2008 and in the run up to the what we called the carpocalypse and the bankruptcy, GM was handing out dividends, and in fact they had quarters where they increased dividends. And so in the short term, a few quarters of GM doing this, let's get our share price up, let's buy back stock, I think is okay. I think it's fine every now and then for, a car company to say strategically, we're going to focus on share price, and maybe that's a good thing to do for a short period of time. But there's a cost to that, and the cost is long-term investment in the company. And if you look at its crosstown rival in Ford, Ford is still making some large investments in building a cheap EV. They still have some really big long-term plays, and it's probably going to hurt Ford's share price relative to GM's in the next 2 to 3 to 4 years. But at some point, is GM going to be in a worse position than someone like Ford because Ford has made a bigger investment? I'm not sure. I mean, smell the rosebuds while ye may. Maybe this is a good time for GM again to say, okay, fine, we're going to have a bunch of quarters of profit. We're going to have a bunch of quarters where we improve that profit. We maybe can up our forecast. We can give out more dividends. We can buy back more stocks. And that's going to make our company more valuable. If our company's more valuable, we will then have more money to invest in the future. That is definitely a way that this could go. The other way that this could go is you have a few good quarters, you get a lot of money, you fall behind on investments, you fall behind like you did with Tesla and EVs, you fall behind in these areas as the market's changing. You spend too much money on automation and Cruise, you've made a bad bet there potentially, and then you don't get to this point that Mary Barr said that you wanted to get to, which is doubling the company's revenue from where it was a few years ago. And you get close to it, but you just then lack that product, you lack that research, you lack that momentum, you lack that thing to make yourself really that much more profitable and get that much more revenue in the future. And you lose out to Chinese automakers, you lose out to other automakers. So, again, we'll see how long this persists. I don't think that over 10 years, just constantly returning value to shareholders is a way to have a successful company. But over a year, over half a year, over a quarter, it's a very successful way to be.
Well, I think that's it for time according to our Zoom. Thank you so much for your generosity. I guess the question is just, what do you have happening over on the Autopian you would like people to know about?
Yeah, it's our second anniversary of the Autopian, and I think the important thing for people to know is that our editor-in-chief has bought or is in the process of buying a Pontiac Aztek, because we grew our membership to a level where we said we would do that, and he's going to live it in it a year. So keep your eyes peeled for a lot more Pontiac Aztek coverage, as he's going to live in it for a week, as per the deal with our readers. And he has found an Aztek that has the original Aztek mattress, inflatable air mattress in it. And so, a great GM product that was ahead of its time in many ways, and then succumbed to a few short-term poor decisions made by the company in the design department. And hopefully GM has learned the lesson from its Aztek. Although, honestly, the ballerest thing GM could do right now is come out with an EV Aztec that looks awesome. That's it. That's what GM should do. My surprise pick for 2026, the Aztec comes back as a GMC product and it's awesome and it's the most popular car in America.
I would imagine the success and popularity of Breaking Bad has done more to rehab the Aztecs image than anything else.
Absolutely. Absolutely. It's so weird. The Bronco, it took a long time to recover, but I think the Aztec is prime. The Aztec is the future. GM, Mary Barr, I'm challenging you. Mark Royce, I'm challenging you to build a GMC, do like you did with the Hummer, build a very affordable, cool crossover with a tent and call it the GMC Aztec. Make it an EV or a hybrid, plug-in hybrid, and it'll sell. You have my word, which is not trustworthy at all in this case.
Thank you so much for your time, Matt. I greatly appreciate it.
Good to see you, man. Cheers.